Good morning, everybody. It is Tuesday, January 18th, 2022. We're just coming off of our 3-day weekend here. We had MLK Jr. Day on Monday, so hopefully everybody had a nice 3-day break there. And now we're back to a few weeks here before our next holiday. So let's get started. And we're going to do, because we're at the beginning of our week here, what I'd like to do is jump up to the ultra high time frames and just kind of do a review of what we're seeing from those nether regions up there. So let's look to our 3-month chart, and just real quick, want to point out that we're still holding 50% of that previous bar, so that's somewhat of a bullish clue. However, if you look at the current bar that we're on right now, this 3-month bar, which will close at the end of February, so we do have just about one more month. We're down to the last third of this bar, and we are currently below 50% of that range so far. So a little bit of a bearish clue there, a little bit of a bullish clue from the fact that we're still holding 50% of that previous candle. And so we'll see what happens. These two bars here obviously look like a little bit of indecision is going on in the market. And this one, the current bar, even more so than the previous bar, because if we continue to stay lower in price down here around 4,500, 4,600, and potentially go even lower, and this bar closes, we'll have a huge doji, huge wick to the upside there, and could be a little bit of a clue. In fact, right now, these two bars are somewhat of a clue that there's a little bit of a hiccup and a little bit of trouble in just kind of a nice continued trek higher. So there's our quarterly, essentially the highest time frame we're really considering here. Our monthly, remember on the monthly we talked about this candle here that closed at the end of December going into January was a very strong looking bar. So we couldn't see the current candle is the one that is now in progress, right? And we'll close at the end of, what do we have, another 2 weeks here. So in about 2 weeks this will close and we'll see what happens. If we do end up selling off more, and we break the low of the previous monthly bar, which happens to be 44.8475, if the market comes down and breaks that, now just we have the opposite of what we saw with the bar here that closed for December. So remember we said this was the bar that closed in November, looked very bearish, but then this bar, it ended up engulfing that entire previous bar that closed in November and engulfed it to the upside. So we got a bullish engulfing bar, which we said was somewhat of a bullish omen. And then we did have that bullish divergence off the low of that candle as well on the monthly chart. I mean, that's a very high time frame, a very nice bullish, clear bullish divergence, very nice clear bullish engulfing bar. Everything looked pretty strong. You can see what ended up happening here is we just peaked above the highs of that bar, and now we're failing. So if this comes down, it breaks that previous monthly bar. We now have, rather than this bullish engulfing situation, we now have a bearish engulfing bar, and that's a pretty wide range right there. So would not be a good little omen for the bulls. And again, we've been talking about this pattern that's going on the higher time frames up top here, where we continually inch higher and higher in price and continually inch higher and higher on the lows of price on the pullbacks, but then the RVI makes lower highs and lower lows. So we've got kind of an interesting pattern here. Where is it going to break, right? That's the question. Now, typically, this kind of pattern, you would think, okay, starting to kind of peter out, coil up, probably going to potentially break to the downside. However, in the past, if you just look at what the market's done, you get this pattern here where things start to kind of trek higher, the RVI starts trekking lower, but then you get a little bit of a hiccup, and then the bulls just continue to push. So from this market that we're in, this S&P 500, even though we continue to get patterns of weakness in the market, the bulls just end up jumping back in. So it wouldn't be surprising to see a huge hiccup here, get a bunch of people almost convinced that the market has to sell off. You know, it's got to sell off. We've been petering out. We've already pushed whatever 1,600 points since the COVID correction, and this thing has to pull back, right? That doesn't have to happen. What could happen here is they hiccup, and then the next thing you know, we're breaking above this trend line here to the upside, right? So we'll see what ends up happening there, but just to let you know, there's some interesting stuff going on up there from that candlestick perspective. Okay, our weekly now had the same, like I said, we see this on the monthly, the weekly, and the daily. This coil pattern of higher highs, higher lows, but then RVI has lower highs and lower lows. So let's look at this weekly. Let's scrutinize these candlesticks really quickly. So previous weekly bar, look at that. Not looking too sexy from a bullish perspective there. Looks very ambivalent. In fact, looks to me more so much more bearish of an omen. But we were also watching the fact that we could argue there was potentially, since we pushed lower here on RVI, potentially a bullish argument from that low, which is why I have that candle there. So even though it was a pretty bearish looking bar, huge pullback there last week, we do have a bullish argument from that low. Now what needs to happen, and you'll hear me say this for any type of setup, is this next candle here, we have to wait for it to close, and this will close at the end of this week, so just in a few more days. If this closes and we actually have a peak here on the RVI, an actual apex there, then we will have that bullish divergence. So we'll have to kind of watch. And then ideally, what we'd like to see is price come up and break the high of the candle where we saw that bullish divergence. So we would like to see a break above 47.39.50 up there for a true confirmation that we've got the signal. So that's it on the weekly. Looking pretty funky up here. A lot of those bearish signals from the highs. But again, on that pullback, we got a bullish divergence again, indicating potential for that push back up. So again, we'll have to see if that's what the bulls do here coming into this week. Remember that previous weekly candle, the low of that candle is 45.72, give or take a few ticks. So if the market comes down past 45.72, we're now kind of following through in this very bearish looking pattern here from a candlestick perspective. So we'll watch that 72 as well. And that kind of concludes the higher time frames here. Things look very, very bearish from the highs when we look at this higher time frame. Now that we're on this new weekly candle, now that the monthly is really starting to follow through to the downside, and the problem is every time I say that we're starting to get a high time frame bearish signal and things start to correct a little bit, it turns around and it keeps going. So that could very be possible here. So we covered the high time frames. Let's get into our daily here, kind of the lower end of that high time frame spectrum. And just looking at this current leg, if we look at kind of after the major correction here, towards the end of, let me just confirm this is the right year, towards the end of last year, and then we had a nice push going into November of last year, at least on this contract, right? And then here's our Santa Claus rally at the end of the year. If you look at the lows from that pullback all the way to the high after our Santa Claus rally, we've got this retracement going on. The lows from there all the way to the all-time high, and we're sitting right around 38% of that leg. 50% brings us right into that area where we really launched out for that Santa Claus rally, and then a little bit deeper, 61% of the whole push up brings us basically right into this swing high right here, right? And you guys know how much I like these naked swing highs and wicks on high time frame charts, and it happens to be almost exactly 61.8. So if they do start selling off, they can get through that major swing low there around 72. They can get through 50% retracement. Wouldn't be too surprising for this to be an area for some type of support, or maybe just a little bit lower into the next major swing high back there from the October. So this is just some higher time frame considerations if they do end up selling off and getting through some of these major levels that we have in this immediate area. So daily, again, looking at the candlesticks, looks really, really bearish here, right? This is our current daily bar today, and the market hasn't even opened yet. Now keep in mind, if the bulls just rip out of here, this could turn into a really strong looking candle, but at the moment things look really bearish. The previous day, which was our half day from yesterday, MLK Junior Day, pretty tight range. And the bar before that, before the open yesterday, looked like this could potentially be some type of reversal bar for the continuation higher. In fact, if you look at this move, remember we said back here, this looked like a really strong bar, really strong bullish rip out that day, and we got follow through. And then this right here could have just been a nice healthy retracement, right? Typically we'll see a market push, come back, retrace a good percent of the move. This was way more than 61, right? We're talking at least a 75% retrace. But then we see recovery and then a nice follow through for a continuation higher. It looked like we were going to kind of get that going into yesterday, and then yeah, everything just continued to fail from there. And then we could look at it from the other side and consider the retracement and the turn where we turned there. So notice where the market came to. Came down, came up right to the 50. So got a 50% retrace of that smaller sell-off there, that smaller leg, and now we're coming back down. Now the 27 extension of the most immediate leg here, right where we found the 50% retrace off of, that 27 extension would bring us right to the swing lows from that day on January 10th when we had that really strong rip. So kind of interesting to note that. Also interesting to note that the ratio of that leg, 61.8, brings us right to 50% of the larger leg and right to that area we talked about where we ripped out on December 20th. And then the 100% extension of that leg, that ratio would bring us right to the 61.8 and right to that level that I marked from all the way back in October. So a lot of good confluence on some of these areas below us. Does that mean the market is going to come down and bounce off that level for a 100-point push? 100% no. It doesn't mean just because there's some good arguments for some of these levels that the market's going to come into them and it's going to hold 100% and go for a nice push. We don't know what's going to happen next, but those areas are giving us some interest here this morning. So those are the high time frames. Spent a lot of time, like I said, which is why I wanted to start earlier, because we are at our first day of the week. So important to kind of look at those higher time frame considerations as we come into the beginning of the week here. And pretty much every high time frame is looking very, very bearish. And one last thing to point out here is that the leg we were looking at last week, as we were pushing out of this really strong candle, we said we have to get through the swing lows back here at 47, 47.50. In fact, that should sound familiar to you if you follow along with the morning analysis or you're in the trade room. That 47, 47.50 swing low was essentially kind of that first level we wanted to breach and get through to have more faith in the potential bullish reversal. And look what ended up happening. They came right in front of it. I mean, arguably still 7-8 points away from the swing low back here, but came right up into that area and failed. And that also, from a retracement perspective, is just about a 75% retrace to the upside. So there's the 61. It came up to, I would say that's probably just about 70 to 75% of the leg. And now you can see we're failing here, right? So I think that's it for the high time frames. Let's go down now and take a look at some of the intraday time frames here and see what we can do here. So we've already covered the fact that we're retracing kind of the major leg, and so we have some considerations below us. This is that level back here where we ripped out of that was that really strong demand area. So coming back to that level again, I don't know. I mean, we got the really strong rip back at kind of what, Monday or Tuesday of the Santa Claus rally. We came back, tested it almost to the tick for this really strong rally that probably faked some bulls out here because of how strong that push was higher. And so coming back into it, I don't want to say with confidence that we can expect a bounce, but there might be another reaction there just because of how strong it's been in the past. And then a deeper, we've talked about the swing low back here around 4,500 and the swing low a little bit deeper around that 44.84 area. Again, if they continue to sell off here. Now, what I'm seeing on a 4-hour chart is there's a potential bullish divergence from our overnight low. So if we start to dial down and see the same argument from that overnight low, this might be a good dividing line to watch coming into the open. So if the bulls hold that low, and again, we'll have to look and see if we have more bullish arguments from down there. So before I even say anything, let's just make sure that is the case. But right now, this 4-hour candle, again, if this next 4-hour candle, which is currently in progress, when this closes at 7 a.m., if it closes and we have an actual peak here, and it might actually take the next candle to open at 7 and 4 more hours before we have it, we'd want to see that peak in order for there to really be a signal. And then again, from the perspective of this kind of trade setup, we'd like to see the bulls push through the high of the candle where we saw the divergence form. That would be kind of confirmation that the signal is getting follow through. Of course, remember, something we always argue in this room is sometimes waiting for confirmation, you end up missing out on a big part of the move. So that's something you're going to have to consider from a trader's perspective, how you want to manage that kind of stuff. From a 4-hour perspective, remember, this isn't, in my opinion, the most tradable thing from an intraday perspective. It's just giving us a level to watch and then a signal that could potentially hold. So from the 4-hour perspective, again, things look heavy. Things look bearish if you just step out and look, making lower highs, lower lows. Really not seeing any type of strong bullish follow through. In fact, from a 4-hour perspective, look at what happened here just a day or two earlier. Really strong follow through from the bulls here off of the low from back on January 14th, and then absolutely no follow through from there. So huge wick to the downside, closes up close to where the open was. Then just from there, absolutely no follow through, and we broke the low of that wick, and now we're lower. So everything to me looks pretty heavy, but we want to keep in mind what we're seeing right there. This wouldn't be the first time we saw a confluence of bullish signals, even though we're in a bearish looking chart and there's some type of rip right out of that level. Now remember, we need to see if that's the case. I don't know if that's the case, but I'm seeing potential bullish signal from there, despite the bearish look to the chart on the 4-hour. 60-minute, and see already, I'm not even seeing the 60-minute giving me a nice, clear, bullish case from the overnight low to agree with the 4-hour. So you can already see maybe I'm not even getting the confluence at all. So daily potential, right? Push lower. The RVI is technically higher. So right now the daily and the 4-hour potentially could argue for the bulls there, but we still have a lot of time for that signal to really follow through. So I don't know, for whatever that's worth, we do have potential if it was to close the way it looks exactly like it does right now on those two. But then the 60-minute, really not agreeing with it. Let me look at the 30 really quick. 30-minute, yeah, 30 minutes there, okay. And 10-minute is there. So we have pretty much every time frame except for the 60-minute giving a really nice bullish signal from the overnight low. So that's going to be important this morning. If we stay above that level, there is potential, because almost every time frame shows a bullish signal from there, that we could get an attempt to push higher. So we want to keep that in mind. And I think that covers it for kind of the perspective of divergence for the higher time frame setups. Everything is pointing to a potential bounce from here. However, the context of the market is very bearish. So again, probably going to be more interested in finding shorts this morning. However, if the bulls hold where they are and we don't break that overnight low, there might be an argument for a potential turn in the market here. You can see right now we already have 45.90 to 46.15 for just about a 25 point push out of the overnight low. That might be all we get. Okay, so that's kind of the higher time frame perspective. What we also want to do here is consider the levels we have above and below us for potential support and resistance here this morning. Now, below us, we've already kind of considered some of the levels. All right, there's not much else sticking out to me outside of some, maybe this level, which I don't know if I mentioned here, just about 45.68 to 45.71. So let's just call it a little 3 point range right in here, which actually does coincide with that swing low we talked about. So maybe you already covered that. So we've covered some of the levels below us we would want to look for potential support. And in my opinion this morning, we want to be short into these levels, taking profit just in front of them in case there's a bounce. I don't know if I want to be wildly buying the market right now, given the conditions we're seeing. Now, on the flip side, if the market does follow through with what we said was somewhat of a decent confluence of bullish signals from the overnight low, we have the swing low right here to consider it right around 25.50. We've got the previous daily low at 46.3875, and then our eye level at 46.4250 here. This little box right here, very possible for there to be some resistance. So if, let's just say theoretically, you saw a good buy signal at the open and you got long, you'd want to take profit, in my opinion, right around that swing low and right around the previous daily low, just in case the bulls jump in here and the market sells off either from there or from here. Now, I'm not saying the market's going to, I'm just saying there's a possibility those would be two levels. And then we do have this other swing low back here, right around 47.50 as a potential hold. Now, from a previous daily perspective, the previous daily high, previous daily low, and 50% of it, these are important levels that we're going to want to get through for any type of bullish follow through this morning. If they can't get through some of these levels below and the previous daily high, it's still, in my opinion, a seller's market. Of course, anything's possible. I have to say this every morning. Anything's possible. And if we see some type of insane bullish momentum here out of the open, it might make sense to get in on a low risk trade to see if we do get follow through to the upside. And then again, if the bears really jump in and there's a lot of really strong selling going on, we've got to really capitalize and jump in to the downside. And at the moment, coming into the open, it's going to be hard to say what they do. So we'll just have to be patient and see where the momentum is here coming into the open. And there are some key levels we have above and below us, which we'll continue to discuss with our members coming into the open. So pretty long intro here this morning. Let's cut it off, get ready for the open, which will be in just about a minute and a half. So to everyone out watching on the internet there, have a great day. We're going to jump down to our members section and to our short time frames here, see if we can't find some trades coming out of the open. So have a great one.